Today's the 60th birthday of Ken Burns, Geddy Lee, and Tim Gunn. Let's make it work, people. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Wall Street's stumbling out of the gate this week. Earnings season rolls on with the Dow, NASDAQ, and S&P 500 all finishing in the red today. Joining me in studio, Bill Barker and Andy Cross. Guys, our top story. On Tuesday, President Obama heads to Tennessee for an event at an Amazon warehouse. Today, the retail giant announced it is hiring 5,000 to 7,000 people to work in Amazon warehouses and customer service centers. The move would increase Amazon's warehouse staffing by at least 25%. Stock in a little bit of a pullback today. Is this one of those things where it's a short-term hit on the company's bottom line, but maybe a long-term payoff?
Well, if you're associating the drop in Amazon stock with the visit of the president, I'm not going to go there, Chris. Obviously, this is a long-term play. Jeff Bezos has always run this company from the long term, from day one. And I like this move with them adding and widening out their distribution base. I think it's really important for Amazon's competitive position because they spend so much on shipping and they eat those margins up, especially for those Prime members who pay that flat, like I do, pay a flat $79 fee. They spend so much on shipping, so the more the distribution warehouses they can have, the better it is for Amazon's business to ship more stuff in a quicker fashion. So this is really an investment for the long term. It's very similar to what Jeff Bezos has done for over the life of the career at Amazon. I think it's good for customers, of which I am one, and shareholders as well.
Is there any CEO that gets as much leash from Wall Street as Jeff Bezos? I mean, the guy's had an amazing track record. I'm not taking anything away, but it seems like, we just had the recent earnings, which weren't that great. Everything he comes out with is basically, well, this is an investment in the future.
Yeah, well, I think there's execution that is mostly responsible for the length of the leash that he gets. That is the satisfaction of the customers, the likelihood that they will continue to be satisfied, that Amazon will be a growing part of people's purchasing over the next couple decades. I think it explains it more than just a willingness to give him a pass. The numbers do matter, earnings do matter, but the execution has been more than anybody expected, almost at every point along the way.
When you look at the stock trading just north of $300 a share, is it a good price? Is it a little rich? What do you think? No,
well, the valuation is very hard to work with Amazon. So what you really have to think about is a long-term perspective, as you have, and this has been a long-term winner for many shareholders over the years. You can't certainly trade the stock. You have to really think about what the company Jeff Bezos is building. This is going to be $100 billion sales in revenue in sales. At some point, that's one of the largest companies in the country, and I just think the more and more wallet share that Amazon's going to take is going to be really good for shareholders, and it's been great for customers, as Bill has said. And I think the stock really has a long runway ahead of it, as long as Jeff Bezos continues to execute.
All right, let's get to some of the day's movers and shakers. Hertz second quarter profit rose 31%, but shares taking a dip despite a solid quarter. This seems like it falls under the category of good, not great.
Well, it falls under the category of what do you have to do when you've got an all-time high for your stock to get it higher than that. And you have to beat expectations rather than meet them. Stock pulls back a couple percent. 31% is slightly misleading. That's not all organic growth. The company's been making acquisitions. So it's continuing to do very well, but you don't get to go higher every day.
Canadian retailer Hudson's Bay is buying Saks for about $2.4 billion. Hudson's Bay is also the parent company of Lord & Taylor. This is, speaking of acquisitions, now north of 300 locations across North America.
Yeah, this is a relatively small company buying another relatively small company. They're both around like the $2 billion mark. So it's an acquisition that on paper looks good for Hudson Bay, but the amount of leverage they're going to have to take on and the execution risk here makes it really tricky for shareholders, so I would stay away from it.
Wynn Resorts' second quarter profit rose only 6% after some one-time charges affected the casino company's bottom line. There's a company that makes a lot of its profit over in Macau, and with the China slowdown, how's that going to hit them?
It is hitting them. Macau only growing at 3% is not what investors have come to expect. It is one quarter, so let's keep it at that. However, if China really slows down over the next few years from where it's been growing, Obviously, that's going to hurt its business there. And the company is opening another casino in Macau as well. So it needs there to be a healthy gambling economy going on there. Over the long term, I think it'll work out fine.
And finally, Omnicom Group is merging with Publicis Group to form the world's largest advertising and marketing firm. I don't know, is bigger better in this situation?
Well, I think bigger is better when you're going up against the likes of Google, which essentially is what this is doing. This is old school competing with new school. By some estimates, this organization will be responsible for 20% of the media buying around the world. That's huge, but really they're going up against Google. They want access to data. They're trying to get it. But really, this is just the opposite of the Hudson Bay. This is two big companies merging together. Those historically don't work out very well.
All right, that's going to do it for this day's trading session. Let's look ahead through the rest of the week. Bill, what's a stock you've got on your radar?
I'm looking at American Tower. This is a company that we hold in a couple of the portfolios, the mutual funds at Asset Management here. It has come under the scrutiny of Muddy Waters, a report that has sometimes good, sometimes less good record on its research and going after stocks. Accused the company of some auditing and financial transaction mismanagement. The company has responded on TV. Now it'll respond with its earnings report later this week, and I'm interested to see what comes out of that.
Okay, Andy, what about you?
Discovery Communications reports tomorrow morning, the global entertainment property. What I'm really interested in to see is, can they continue to see growing ad rates as well as they expand their market share around the world? This is really a global property, but they have to continue to see both subscriber growth as well as their ad rates go on their advertising. If they do, that continue to be good things for Discovery shareholders.
Okay, for Bill Barker and Andy Cross, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal